Hello and welcome to the Women's Financial Empowerment Group. I'm your host, Ruth Aguiloso. If this is your first time here, thank you so much for visiting my channel. Please subscribe to this channel, hit the notification bell so you'll know whenever I upload a new video, which is twice a week. Like this video, comment, and share it with your friends. And if you've been here before, thank you so much for your support. I really appreciate it. Please go ahead and like, share, all those wonderful things, because I appreciate your support, like I said before, and it helps to grow this channel. Today's video is a very special video. In today's video, we'll be talking about life insurance. It's a topic that I don't hear people talking about enough because it's something that I believe is super duper important. Now, you can hear me talking about it on and on and on, but I decided to bring on a special guest today. She works in the life insurance industry, and she's also a very longtime friend of mine. As a matter of fact, she was the one who encouraged me and had me sign up for investments at a very young age. So not only did she set me up with life insurance, but also my first investments. And because of her, I was able to have a down payment on my first home. So I'm so excited to have her. Let's welcome Miss Lateefah Abul-Jabbaar. Hello.
Hi, good
Hello,
morning.
Miss Lateefah. Welcome.
Thank you.
I was just telling my viewers that you were the one who first put me on to life insurance and also my first investments as a young woman, and I was able to purchase my first home because of you. So I owe you a lot of gratitude. Thank you so much. So thanks for coming. Say that again. I'm sorry.
That makes me feel good that you used what you learned to help yourself and your family.
Yes, and that means a lot. So that's enough from me for right now. I'm going to let you go ahead and tell a little bit about yourself so that people can know, a little bit about you.
Okay, thank you. Well, I'm a native of New York City, not just New York State, the heart of New York. Grew up in Harlem, now in the Bronx. And just who I am, I like to help people. And that's why I just told Ruth that I'm so happy that she used what I was able to share with her. And I continue to do that. I'm a retired New York City public school teacher, but I'm still teaching, sharing with people what it is about what finances are. I'm a mother, a grandmother, and a great grandmom. So I'm sharing with them all of what I do, and I continue to share with people that I meet, things that they can do to help themselves get better. So basically, that's who I am, a person that likes to help, and whatever I receive, I like sharing with others.
Thank you so much for telling us about yourself. So let's go ahead and get into some questions, because I know that a lot of people have questions, and there's a lot of misinformation out there about life insurance. So hopefully you can clear up some of that misinformation. So what exactly is life insurance and who actually needs it?
Okay, so life insurance is actually not insuring your life, as though when you insure your car, you get into an accident, you have the right type of life insurance. Your car could really be replaced. Life insurance is actually replacing the income of the breadwinner, that person who's responsible, or persons who are responsible for the family, such as a married couple. Let's just say you're a married couple. And if one of you were to pass away, that income would be lost as well. So then what we want to do is make certain that that income is replaced so that those behind will continue to live at least on the same standard or even better. We don't want people to lose their homes, and many times that happens. And who should have it? Everyone, because when we pass away, and we all will, it's not if, when we pass away, the expenses of just burying you, just having those last, the service or whatever you do has to be paid for. And then if you're leaving behind someone that you're financially responsible for, that's the same thing. And sometimes people say, well, I'm single and I really don't need it. I have enough money. But just think, many times we have a parent that's still living or someone that we love that's still living. And later on, they're going to get older, and more than likely, you'll be the one that'll help them financially. So if you pass away before them, then that income is gone. So I'd say to everybody, and some people say, well, children, yes, children die. And we know that many times children die before their parents. So we want to make certain that there's money to not only bury them, but say you're going through an emotional state and you need to put yourself somewhere physically. If you have covered them and you have enough money with that, you're going to be able to use that money and move and go away and just clear your head and help yourself. Or if you need to have some assistance from a doctor, you have the money there. So I would say everyone, Ruth.
Okay, thank you for clearing that up, because I think that some people think that they don't need insurance, and definitely not for children. You don't hear a lot of people talking about insuring their children, but as you said, it's something that's very important. According to Forbes in September 2019, 67% of women have reported that they have life insurance, compared to 79% of men. What do you think accounts for that disparity there?
Well, in my opinion, it's based on, and this is a general statement, and again, in my opinion, see, it's based on a lot of things. Many times people don't understand why they need life insurance. So across the board, we're talking about men and women not needing it, because feeling they don't need it. Secondly, with women, it's a financial situation. In this time and age, women are still receiving less pay for the same job they do. I mean, back in 2018, it was reported that 78 cents, women make 78 cents and 80 cents for every dollar a man makes in the same job, Coupled with that, we, as being the caregivers, many times we don't stay in jobs long enough to accumulate wealth. We don't stay in jobs long enough, for the pensions and things of that sort. So when we're looking at our expense, and we have debt, on top of that. We have debt, when we don't have enough money from whatever pay we have, we use the credit card. So we have that. And then it's just that, coupled with that, not knowing about what insurance is, in my opinion, I think that adds to why women do not get the coverage.
Okay, thank you for that. And that's why I'm doing this, so that more women can get on board with life insurance, or at least get the right insurance, but we'll get into that later on. If someone has life insurance through their job, do they need more insurance, or is that enough insurance usually?
Okay, generally speaking, when you have life insurance in a job, the company, it's not something that they have to have, number one. But normally when you leave that job, whether it's voluntarily or involuntarily, you don't have that insurance. And if you do have that insurance, you may not be paying the same premium. So it's something that you're not in control of at all. Isn't it better to know that your family's future, your family's life, you control that? You don't leave it to the whim of a job. You leave, and even if you don't leave the job permanently, if you're taken off payroll. So that means if you take maternity leave, family leave, you're off for other reasons, you're off payroll, you're not getting paid. Many times, that means all of the fringe benefits, such as life insurance, no longer with you. So when you wait later, say you don't do what you do, and you're now terminated later, or you leave, whatever the situation, you're older. And the premium is based on your age as well as your health conditions. So it's best for you to also have your own personal life insurance.
Okay, thank you for clearing that up. How much life insurance do we actually need? I think we have a delay.
Okay, what we look at is, I think so too. So yeah, what we look at is the need of your family. What is the need of your specific family? So we use this, what we call the dime system. We look at, is there debt? What is your income? Are you paying a mortgage? Are you paying education for your children, or will you be paying that? Those are the things that must be replaced. Remember, so it's income replacement, that if you were alive, those things would be done. So we look at about 8 to 10 times what your income is. And then we couple in that, because when we die, the debt doesn't die. And those creditors will go after whatever assets that person that passes away has. And that means you're here, still living, you're going to get letters, you're going to get calls, all of those types of things. So that's what we look at, replacing the debt, the income at least 8 to 10 times that, if you're paying a mortgage, and the education fee that you would be paying for your child or children.
Okay, awesome. All right. So here's a big question, and this has been bouncing around for forever. And anyway, I'll just ask the question because I don't want to get into it too much. But so which is better, like when it comes to life insurance? Is it term life or whole life? And yeah, please go ahead. I'll ask you this follow-up question afterwards. Go ahead.
Okay. So we look at term life, we look at whole life, and I know a lot of people are thinking, oh, well, with whole life, I have the money that I can have later when I retire, because that's the way it's advertised, money for my child. Okay, so we look at really the way life works. Normally, when you're younger, you have a lot of responsibilities, but you don't have money accumulated. Later on, those responsibilities will probably be eliminated, or at least lessened. Your children are older, you don't have to take care of them financially, you're out of debt, or at least it's lowered. So we want to make certain at the time when you need the most coverage, you get that. That's the term insurance that we're going to give you when you actually need it, and separate and apart, helping you to invest your money so later on, when those responsibilities lessen, you get less coverage, or if you've done the savings correctly, you don't need coverage at all. So with whole life, you're paying for two things and you're only getting one. What do you mean, Miss Lateefah? Well, what you're paying for the coverage, and you're paying for the so-called cash value, or the money that you have. That money will never be paid to your beneficiaries. That so-called cash value will
Really?
never be paid to your beneficiaries. So even if you have had whole life and you accumulated, say, $10,000, you pass away, the only amount of money that your beneficiaries will receive is the face amount, what you're actually covered for. Now, people say, oh, well, I can borrow. Yes, you like borrowing your own money? So you're telling me you have money in a drawer, you're going to take that money and you're going to borrow it? Because what comes with borrowing? Paying interest on it. Yes. So you're going to borrow your own money, and then you're going to pay interest on it. If you don't pay it back, the principal, the amount that you borrowed, plus the interest will be deducted from the face amount. So your beneficiaries will only get the balance of that. When you think about it, do you like giving your money away like that? And that's why we share with people, no, you get term insurance and you control it, because with whole life, no matter what changes occur in your life, guess what? You're paying that premium for all of your life, for your whole life. And that's why most people who understand this, they tell you that. Susie Orman, a lot of people listen to Susie Orman. She speaks to you about term, and she's just one of the many that speaks to you and tells you term life is the best.
Okay, thanks for clearing that up, because I've even recently heard someone saying that they would be switching to whole life. I've heard more than one person say that, actually, because at first whole life is very expensive, so they feel like they can't afford it. But then later on, when they start to make more money, they feel like, hey, it's sort of like a graduation. It's like, okay, let me go with the whole life, because at least my whole life I'll be protected. So I think that it's good that you cleared that up, that when you become a senior citizen, or even, you get to that point where you have to have a caregiver, you don't have as much responsibility, because you don't have usually you've already paid off your house and your car, and your children are about their business. You don't have to pay for their schooling. So it's good that you really cleared that up, because I think that a lot of people have that misconception. And about the cash value, I didn't even remember about that. So I'm glad that you put that out there, that the beneficiary does not get that cash value. So basically, what is a cash value for? It's just for you to borrow. And then if you don't borrow it, what happens?
Well, that cash value is a way in which it becomes attractive for us to get that whole life. Um, and to be honest with you, I don't even know why it's there. To be honest, just personally, to be honest, it's there, it's growing. And just to tell you about the growth of it, that cash value is growing at a lower percentage rate than the interest rate you will pay if you borrowed your money. Isn't
Wow.
that something? So the
Yes.
same
Yeah.
company that's so-called having your money grow, that money that grows, it's not going to be enough for you going to retire and using the money. It probably won't even pay for your students, your child's books as it's going now. And thank you, Ruth. You did mention another thing that I forgot. You're paying more for whole life than you are for term. On the 100, on the units, you're paying actually more for whole life,
Right.
getting less in the end, but paying more. I don't know about you, but I don't like giving my money away like that.
No, I don't either. Thank you so much for clearing that up. All right, so we'll move on to the next question. Excuse me. So some people may be wondering, why do I need a medical exam? Can my doctor just go ahead and just tell them how healthy I am?
Well, actually, um, we have the two different types of term insurance that you can get. And we do have one where it's called Rapid Check, and they go into the computer and they get a report of what your medical condition is, and your physician writes in what your condition, how healthy you are, what it is. So we do have that where we just get your doctor's report. Now we have, and most companies do this, depending on the amount of your coverage and the
Okay.
age you are when you get coverage, you do need a medical examination, because remember, you're taking a risk and the insurance company is taking a risk when you
True.
take it out. What am I talking about? You're taking a risk at, you don't know when you're going to pass away, but you're continuing to pay this premium. You don't know how long. However, the company is also taking a risk. You can pay that first, and I'm only talking about what I'm familiar with, the company that I'm working with, that when you pay your premium and you've answered specific questions about your health, if you have not misrepresented and you pass away, the company, even before we deliver the policy to you, either electronically or physically deliver it to you, our company will pay your beneficiary the amount that's on there. So yeah. So they want to
Okay.
make certain that you know the condition you're in. And that doesn't mean because you have a health condition that you're not covered. It goes through underwriting. They determine what it is. Are you insurable? Are you insurable at that rate, or is it more of a rate that you're going to pay because of your health condition? And also, do you get special discount because of your health, your weight and your height falls within a certain condition, you're not a smoker, and they look at the health history of your family, you can get a discount on that, either preferred or preferred plus. So our company makes certain that they look at all of that, and all companies do look at you, what health you are in at that time.
Okay. Okay. That is wow. Thank you so much for giving all those details there, because I think, again, there's some misinformation about that. And honestly, it seemed like it was across the board that every company, every situation does a medical exam, and a lot of people just really don't know, what is that medical exam for? Does that mean I'm not going to get insurance, or what does it really mean? So thank you so much for giving some extra details there. All right, now let's move on to children. You did mention that children need life insurance as well. So if children need life insurance, like, about how much do I need to get for my children?
Okay, we look at the age of your child, and we look at what's happening. So normally when we bring on, when a family comes in and we're looking at their finances, because we don't just do insurance, we do a lot of things. So just like a doctor takes that x-ray or has that x-ray taken and the blood taken, all of that to see what the condition is, and we do that. So then when we see what financial situation the family is in, what is it that they're paying right now on their monthly expenses, and what can they afford, and they let us know that, plus the analysis that we do. So I would say The minimum for a small child is $10,000 to $15,000. That's the minimum. Now, when we look at children who are getting older and who are out there more, who are doing different things, your child is in college, your child is in high school, they're out there playing balls, they're interacting with other people, they're in a whole lot of other different environments. Now, we cover them anywhere from $25,000 to $50,000. And what we do, and it's not a large amount of money either, because we have what's called family banding. We don't give a policy for the wife, the husband, and each child. We have one policy for the whole family, and we have riders on that. So that's what we do. And then with the child being covered, once they're covered as a child rider until they're 25 years of age. At that time, then the parent can pay for their premium alone, or they may be working, and it's very small amount, and they can get up to $150,000 with no medical conditioning, no medical examination, even if they have developed something, because sometimes children are younger and later on through their lives, they develop a medical condition and they could become uninsurable, or their rate would be increased. Not with us. They'll get it. And so those are the parameters that we use, but it varies, like I said, Ruth, from family to family.
Okay, that is good to know. All right. Thank you so much for clearing that up. All right. Next question. Where was I? Sorry, I missed my place here. Okay. So now you are a licensed not real estate, life insurance broker, and also you do insurance. I said insurance twice. I mean investments. Sorry about that. So could you tell us, what states you're licensed in, so in case any of my viewers want to contact you and work with you, they'll be able to do that?
Okay, I jotted it down in case I forget any state, because I keep adding on, because we have family and friends in those states. So I am definitely licensed. I'm life licensed in New York, and many of these states I'm also investments licensed. So the states that I'm licensed in are New York, New Jersey, Pennsylvania, Connecticut, Florida, Louisiana, Virginia, South Carolina, North Carolina, Delaware, Georgia, and Maryland.
Wow, that's great.
In addition to that, we have teammates who are licensed in other states where I may not be licensed. Mm-hmm.
Okay, thank you so much for telling us that. Definitely, you're one of my referral sources. So when I work with women as a financial coach, I can refer them if they need life insurance. Obviously, it's optional whether they want to work with you or not, but you're one of the people on my referral list. So final question, for those that want to get in touch with you, how can they do so?
So glad you asked that. I'll give you my my number that I use for business. It's 917 446 5781.
81. Okay.
That's it. My email address is LA, B as in boy, D as in David, UL JABB, that's boy, AAR dot, B as in boy, YE 92, like bye 92, at Primerica, PRIMERICA.com.
Could you go ahead and give us that email address one more time? I'm going to put it on the screen.
Okay. LA, B as in boy, D as in David, UL JABBAAR dot, B as in boy, Y as in yellow, E as in egg, 92 at Primerica, PRIMERICA.com.
Okay, so I'm just going to put that on the screen where your name was, so that people could take a look at that for a few minutes. So again, this has been a wonderful life insurance chat with my friend of a long time, Miss Lateefah Abdul-Jabbaar. Her email is there. Her email address is there if you'd like to reach out to her. her phone number. Just give the phone number one more time in case someone's like fast forwarding through this segment to hear it again.
Sure. It's 917-446-5781.
All right. Thank you so much. I really appreciate you being here and giving us some more information about life insurance. Hopefully this will help a lot of women to get on board with getting their life insurance or clearing up some of the questions that they have, and hopefully getting the right life insurance so that they can better protect their families. Again, thank you so much for coming. I really appreciate your time. And yeah, I'll look forward to continuing this conversation offline.
Thank you so much, Ruth. And you continue doing what you're doing, because what you do is what we all need. All of us women need that. So I appreciate what you're doing. And of course, I appreciate you as the person that you are. And I do love you.
Thank you. Same here. Bye-bye.
Bye-bye now, Ruth.
Thank you so much for watching this video. Please go ahead and like it, share it, leave a comment. This is a really important topic, so I don't want anybody to miss it. Share it on all the platforms. Thank you again. I know I've said thank you before, and I'm going to thank you again for watching. And remember, change your mind, change your pocketbook.